Fed June FOMC minutes, FOMC speech, and this means both are different and both moves market. And these are your FOMC member. Most important is Powell, and all other member does not have same value as Powell. So these member can say something which Powell cannot say. And Neil Kaskari, now we are in FOMC blackout period, and this time this person almost said nothing. Fed Goolsbee, there is a Wall Street Journal event speech. Watch that speech. He had said many things about Paul Volcker and lag effect. So this person is directly saying you cannot raise 5% interest rate and you do not have economic collapse. And these are the same person who is saying golden path to reduce inflation without recession. So first thing, they are directly saying broad equity price rose, performance was concentrated in handful of companies with large market capitalization. They are directly saying about those 7 companies. As long as they are up, entire stock market is up, especially your Apple. If that goes down, everything will go down. Then downside risk to growth. Fed has hiked interest rate more than 5%, and Fed is not alone. All central bank, ECB, BOE, and small central bank like RBI, RBA, and BOC, they all are hiking interest rate. Sentiment about banking sector improved. So they are saying you saw Silicon Valley bank run in March month, and now there is new news about PacWest Bank, but sentiment are almost back where they were before March. And financial condition index, this is most important, and this is combined effect of everything. Their interest rate, which is right now more than 5%, and they will do again 25 basis point rate hike this week, and your dollar and stock price, these 3 things combined make your financial condition index. So rate are up while dollar is down and SP 500 is up. So except rate, these 2 things are creating easing financial condition. So if stock market goes down, dollar goes up, and rate stay at 5%, so your FCI can tight more than right now. And now they are saying no rate change through early 2024. In last FOMC minute, if you remember, they were clearly talking about month name, but now they are only saying early 2024. That's mean first quarter. So month name is deleted from this PDF this time. Still saw a recession occurring in near term, but expected timing was again pushed later. So as long as your SP 500 is up, there is no recession. So what I said in currency video, that soft landing will turn into hard landing, and now they are saying expect that any downturn will be neither deep nor prolonged. So they are saying no deep recession. And this was your last FOMC meeting. Then next, quarterly PCE. So after FOMC meeting, I think majority of price action this week will come after FOMC meeting. So PCE monthly, yearly and quarterly, all of these number will come. So if quarterly PC goes down this week, then sentiment will change. And all of these things which Fed is saying in this PDF and what they said in FOMC speech, their famous line, two more hike. He said one time in FOMC, two times in testimony speech, and two times in ECB forum. So total he said two more rate hike in 5 times. But he also saying that information available on this date. But after that you saw CPI and NFP both change market sentiment. And more data will come, but PC and GDP they will come after your FOMC meeting. And your Jolt, he repeat all the time, he focus on quarterly change. So yearly basis these indicators are coming down, but first week change in quarterly number can create big market sentiment. And decline in consumer energy price, and since their June FOMC meeting, energy price are going up. You can see oil is going up. So what Fed say this week on energy price will be important. In last FOMC meeting, he knew about CPI number and still he gave hawkish speech. But this time CPI is lower than 4%. And Fed is directly talking about China reopening from coronavirus lockdown. And he also talk about this thing in ECB forum. If China growth return because they are doing a stimulus, then thing can be bad for soft landing narrative. And again he is saying decline in retail energy price since beginning of the year, a notable easing in headline consumer price inflation. So energy price are going up again in USA. So be careful what Fed say this week about energy price. And this is your June FOMC meeting, and FOMC member are saying that federal fund rate would be roughly flat over course of rest of this year. So this week your July FOMC meeting 25 basis point is your last hike. And Fed can say directly this week, or maybe their Jackson Hole meeting, or maybe September FOMC meeting. But this hike is your last, and as he said in last FOMC meeting, rate would be roughly flat over course of rest of this year. That's mean till December FOMC meeting. And they are also saying in this PDF in early next year they will think about rate cut. And after FOMC meeting this week, when next minute PDF will come, watch carefully how these things will change, because January month is replaced by early 2024 and rate hike is replaced by flat over rest of this year. Clearly they are saying about rate pause. The next, credit card auto loan interest rate stood at or near highest level since global financial crisis. This is your 2007 to 2009 crisis.
What was your reaction when you learned of it?
Holy cow.
So after rate hike this week, rate will be higher than 2007, and 5.25% interest rate completely collapsed US economy last time. So at 5.50, what will happen to US economy? Same people will tell you who are saying about soft landing right now. And if you have watched this movie 7 to 9, then enjoy the show. And if this is your first time, then you need a hard lesson, because this is not the time to study what happened from 2007 to 2009 and what happened from 2009 to 2019. This is action time, and now you will regret why you wasted your time watching TikTok videos. Then next thing, Silicon Valley Bank in March. So if you are trading anything, but remember one thing, any high and low before Silicon Valley Bank run, that is important. If those high or low breaks, then market sentiment will change. And now everyone has forget there was bank run in biggest economy of our time. In the end of this video, I will repeat this thing one more time to understand how this week FOMC meeting will affect. You have to compare their FOMC speech July and June both. You have to compare their minute PDF June and July both. Then comparison how their sentiment are changing, dovish or hawkish. That will decide market sentiment and market direction. And those sentiment will change again on PCE and GDP number. So till Friday, you can see big action in entire financial market. So real one direction action will come after Friday next week, not this week.
It's your payroll.